Dividend ETFs or dividend stocks. That is the subject of today's video. I'm going to be explaining what they both are, who they're best suited for, and if you stay till the very end, I'm actually going to reveal my favorite 3 dividend ETFs. I'm really excited about making this video because this is especially made. I've made this with a lot of care for people who are either beginner investors or they're starting to think about investing in dividend stocks or even dividend growth stocks. So if that sounds like something you're interested in, just stick around until the end of the video because something pretty cool is coming. Yeah, without further ado, let's get started. Hello guys, Ricardo Torres here from Escaping to Freedom, where I teach people how to get more freedom into their lives through investing. If you're new to this channel, I release these kinds of videos every week, so if you're enjoying it, make sure to give it a thumbs up and also subscribe for future videos. Alright, let's get straight into the meat of the video. Dividend ETFs versus dividend stocks or dividend growth stocks. I'm going to use these two terms interchangeably. First of all, let's start with definition, shall we? What are dividend ETFs? Or actually, what are ETFs in the first place? Well, ETF stands for Exchange Traded Fund, and it's basically a basket full of stocks, okay? You don't choose this basket. You can simply go out there and buy a little tiny bit of this big basket of stocks. There's often dozens or even hundreds or thousands of stocks, depending on which ETFs you buy. Then on the other hand, we've got dividend stocks. If you don't know what stocks are, they are purely a little slither of a company, okay? A little tiny piece of the entire company pie. And you as a shareholder, if you buy one share of a certain company, you are a part owner of that company and they will get their earnings, how much money, their profits that that company is making, and a little bit of that will be paid to you in the form of dividends. Now, like I said earlier in the video, I'm going to focus on companies that are able to increase their dividends every year, okay? Those are called dividend growth stocks. They are my favorite kinds of stocks. I own basically 90% of my portfolio in these kinds of stocks, and that's for good reason, guys. If you look on your screen right now, you'll see a graph. This graph shows you the cumulative returns of companies in the S&P 500 since 1972. And these companies are divided by their dividend policies. Do they pay a dividend? Do they cut their dividend? Do they not pay a dividend at all? And guess what, guys? They found through a lot of research, and this is only one example of several studies that have been done on this subject. They have proven, guys, that companies that increase their dividends every year tend to overperform the broader market. You're basically getting the best of the best companies. So without further ado, let's now compare dividend ETFs versus dividend stocks. And the way I'm going to do this is I'm going to go through 9 different points and I'm going to compare which one's best in that particular point, right? Pros, cons, all that stuff, okay? So buckle up, give this video a thumbs up if you haven't done so already, and let's get started with point number 1. Point number 1 is returns, okay? How much money you get back from your investment. First, let's look at dividend ETFs. Now, when you invest in an ETF, you are buying stocks, okay? And stocks, out of all the asset classes like bonds and CDs, even real estate, stocks are possibly the best way to get great returns. That's why with dividend ETFs, you are going to get good returns. What I mean by good returns is that you're probably going to get as good a return as the overall market, which is around an 8% a year, at least in a very, very long period of time, which is fantastic, by the way. An 8% a year means that the money you put into the market doubles every 9 years. And by the way, if you're wondering how I worked that out so quickly, I'm using the rule of 72. I made a video about this last week. I'm going to put it somewhere around here so you can click on that if you're interested. But overall, with dividend ETFs, you are going to get good returns. Now, if we look at dividend stocks, you are going to get better returns. What do I mean by that? Well, there's basically a fundamental difference in buying individual stocks that, as you're going to see in the other points, make up for many of the advantages of buying individual stocks. And that difference is that you can choose when to buy the stocks. You see, when you buy an ETF, you can't really choose, okay, you can choose when to buy it, but you can't choose what those companies are doing, okay? On the other hand, when you choose which stocks to buy and when to buy them, you can ensure that you're only buying stocks at the best times, okay? Times when that particular company is struggling, or it's going through some tough times, okay? That's when you can get really cheap prices, and then, you know, you look 20, 30 years in the future, that's going to have a real impact on your returns. That's why in this case, choosing individual dividend stocks wins in terms of returns. Point number 2, guys, is opportunities. I've just covered this like 10 seconds ago, so I'm not gonna get too deep into it. With ETFs, because you're buying the whole bucket, you're buying the whole basket of stocks, you're not gonna be able to find really great opportunities unless you wait until a big recession or a global pandemic, for example. But when you invest in individual dividend stocks, you know, you can really find those great opportunities. And personally, I've invested through one of the longest bull markets in history, and I've found some great opportunities over the years. So that's why, again, dividend stocks are better in this scenario. Point number 3 is dividend yield. When you buy dividend ETFs, you'll often have to take a lower dividend yield at the moment that, you know, in theory should grow over time. However, when you buy individual stocks, again, due to those great opportunities, you're often going to find much higher yields for the same companies, basically. You know, you can really choose when to buy companies, get a starting yield that's significantly higher than with dividend ETFs. And guess what? That's going to have a great effect on your total returns. Point number 4 is transparency. And what I mean by transparency is how easy it is to understand an ETF or a stock and to be able to actually do some analysis on, you know, that ETF, okay? Now, dividend stocks win in this point again. Don't worry, I'm not just like fanboying about dividend stocks. Later on in this video, I'm going to cover the main cons of dividend stocks and, you know, situations where dividend ETFs are better. But dividend stocks are simply easier to understand, okay? For example, let's take McDonald's. You know what McDonald's do. They make burgers. They're not the best, but they're good. Also, they own a lot of real estate, okay? And they've got a really successful franchise business. It's a pretty easy business model to understand. I can also go to the McDonald's Investors Relations website and I can see exactly how much money McDonald's has made. It's very transparent, it's very easy to understand. Now, unfortunately, on the other hand, doing the same thing for an ETF that perhaps has 50 stocks, obviously you're not going to do it. It's going to be way more work, which is why you're buying the basket, okay? You're putting your faith into that group of companies. You know what they say, safety in numbers, but they don't have the transparency the dividend stocks have. Which leads me to point number 5, and that is control. I like to have control over what I own. I want to be able to decide when I get paid dividends, which stocks are in my portfolio, when I sell stocks, all right? You don't have that level of control when you invest in a dividend ETF, because guess what? Some fund manager is going to make those decisions for you. They are going to be decisions made in theory for better long-term returns. That is the theory, but then again, you don't have control. For example, you might be against defense stocks, you know, the war industry or tobacco or alcohol because of personal beliefs or religious beliefs. Whichever the case, you might personally not want to invest in those kinds of companies. Well, you don't really have that choice when you invest in an ETF, because while you can see a list of companies invested there, they can sell companies, they can buy companies. You're probably not going to be able to realize when that's happened. That's why if you want control, if you want to know exactly what is in your portfolio, then dividend stocks are the best choice. Okay, point number 6, and actually the last pro of individual stocks, and that is fees. When you buy ETFs, specifically dividend ETFs, you do have to pay a small fee. And that fee doesn't just get charged when you buy the ETF. That fee is recurring. So every year you're going to have to pay that fee. Now with ETFs, especially the ones I will cover later in this video, those fees are very, very small, okay? I'm talking like 0.06% per year. That's not really going to make that big of a dent. But some ETFs do have higher fees than that. I mean, no, 0.3, 0.5%. They are definitely lower than with mutual funds, where fees can go up to 1 or 2%, which is crazy, okay? Trust me, you don't want those fees on your portfolio. But when you invest in individual stocks and you pick those specific stocks, you do your analysis, you choose the ones that you like, the ones that fit your overall goals, your money goals, your portfolio, what you believe in, then you pay no maintenance fees. Again, depending on the broker you have, you will have to pay a small fee to actually buy and sell stocks, but to hold them in your portfolio, for the vast majority of people, there's no fees to be paid, okay? You own that portfolio, you own those stocks, and you pay no recurring fees. Okay, point number 7 is time. How much time do you have to invest into, your portfolio and your investments? No pun intended, by the way. If you're someone that doesn't have a lot of time, then ETFs are definitely the way to go, okay? You can still get great returns. For most of the things that I've covered, dividend ETFs are quite similar to individual stocks. However, they require very little time. You can just go in there at the end of every month, you put your money, you put your savings, and you buy some shares in ETFs, in dividend ETFs, and that's it. You can pretty much forget about them because someone else is going to be managing them for you. You don't have to do any management yourself. Therefore, if you're someone with little time, then this is why ETFs might be better for you. On the other hand, obviously picking stocks takes time. It's not as much time as people believe. When I speak to friends and customers, they often ask me, hey, Ricard, why do you spend so much time in analyzing stocks and managing your own portfolio? It's not that much time really, guys. Once you know what to do, once you know what you're searching for, what you're looking for, it really doesn't take very much time. And once I actually buy my stocks, I leave them there, okay? When I buy stocks, I want to own those stocks hopefully for the rest of my life. They're gonna be the nest egg that I live off and that I leave for my family. So when I personally buy stocks, I don't do that much follow-up. I do track them, maybe once a year, just to make sure that everything's fine, that nothing has gone off track, but I don't obsess about my individual stocks. That's why I say that while, yeah, it does require more time, it's not as much as you probably think. However, if you are someone that genuinely does not have the time or doesn't want to put in the time, which is fine, then dividend ETFs might be the safest bet for you. Point number 8 is how much knowledge each one requires. With dividend ETFs, you do need a little bit of knowledge. You need to know what stocks are. You need to know where your money is placed. You need to basically understand that over a longer period of time, stocks perform possibly better than other asset classes. However, you don't really need to be able to pick out stocks. You don't really even need to be able to analyze stocks. That's why it doesn't require that much knowledge. And for most people, they can get started within a few hours or a few days of doing a bit of research, watching my videos, okay? So subscribe to this channel if you want to be notified of future investing videos. However, on the other hand, dividend stocks, picking individual stocks, does require quite a lot more knowledge, let's be honest. You need to understand what the company makes. You need to be able to understand the balance sheet. You need to be able to know the payout ratio, the dividend yield, the debt to equity ratio. There are certain metrics that you should really know when you buy individual stocks. Like I said, it's not as complicated as it sounds if you're a beginner, but you do need to have that in place. So yeah, it does require more knowledge. Then finally, point number 9 is diversification. When you buy a dividend ETF or an ETF in general or a mutual fund or an index fund, okay, because you're buying a collection of stocks, you are immediately well diversified. That is assuming that those stocks are well diversified themselves by sector, because there are certain ETFs that you can buy where there'll only be airlines or utilities or certain industries or certain sectors. However, I'm assuming that you're going to go out there and buy a dividend ETF, perhaps one of the 3 that I'm going to reveal in a second. But you're going to be well diversified pretty much from the start. Now, that is only going to be a problem with individual dividend stocks at the beginning. Because at the beginning, you're going to have 1 stock or 2 stocks. You're not going to be very well diversified. However, that is soon going to change as soon as you have 10, 20, perhaps 30 or more stocks. Then in theory, if you've done your homework, your portfolio will be well diversified. However, dividend ETFs win point number 9. So there you have it, guys. That was a comparison between dividend ETFs and picking individual dividend stocks or even dividend growth stocks, because they are pretty similar. So basically, the bottom line is, if you're someone that doesn't want to put in the time or doesn't have the knowledge, or you want things simpler for still great returns, dividend ETFs are a fantastic choice. And honestly, I think for most people, this is the best choice. However, if you want to trade, more time spent into doing analysis and more knowledge required, okay, then picking individual stocks, that's where you really make a lot more money. Now, earlier in the video, I promised that if you stayed till the very end of the video, which is now, by the way, I would reveal 3 dividend ETFs that I really like and they're very popular. And I think they are pretty good choices for pretty much anyone that wants to get started with dividend investing. As always, a quick disclaimer, this is not buying advice, okay? Don't just go out there and don't do any research and buy this stock stocks, okay? I'm not telling you to do that. Do your own due diligence always. But with that out of the way, let me just jump into my computer and show you the 3 dividend ETFs that I'm talking about. All right, so the first dividend ETF that I'm going to talk about is called the Vanguard High Dividend Yield ETF. The ticker symbol is VYM. This is a very popular dividend ETF. A lot of people really like it. And basically, you own companies that have a relatively high dividend yield. And actually, at the moment, the dividend yield of this ETF is 3.77%, which is generally regarded as a high dividend yield. Personally, I think it's in a good range, but definitely on the perhaps slightly higher side. And like I said in the comparison, you are probably going to get higher dividend yields when you really capitalize on those great opportunities, because guess what? When price goes down, dividend yield goes up, okay? They are inversely proportional. Now, this ETF is made out of these companies plus several others, okay? This is only 28% of the companies included in this portfolio. However, they are all very good dividend growth stocks. Johnson & Johnson, possibly the best company in the world, in my opinion. I absolutely love Johnson & Johnson. But there are many others, PepsiCo, ExxonMobil, Merck. They are all very well-known companies, which is why, this is a good choice if what you're looking after is, having a portfolio of well-known stocks and then also having, a pretty good dividend yield. Now, the next dividend ETF that I'm going to discuss, this is going to be a bit different, okay? Because a lot of YouTube channels talk about American ETFs, American stocks only. However, it's important to diversify by country as well. At least that's my opinion. So this is an ETF that consists of the Euro Dividend Aristocrats. Now, what that means is that it consists of companies that have been increasing the dividend for at least 10 years, and they are European, okay? This is different to the American Dividend Aristocrats, by the way. European companies don't have a habit of increasing dividends every year. They tend to pay higher dividends, but then perhaps lower them or just freeze them from one year to the next, okay? However, these are all still fantastic companies. If we have a look at the top holdings, you might not recognize any of these companies depending on where you're from, but obviously Bayern is a very important company. Red Eléctrica and Enagas, there are 2 Spanish companies that I personally know pretty well. They are both utilities companies. And if we scroll down, let's have a look for what the dividend yield is. It is currently 3.53%, which again, it's a pretty respectable dividend yield. And when you buy this ETF, this dividend ETF, you will gain exposure to European stocks, which is always great in any portfolio. Then finally, this is probably the favorite ETF for a lot of dividend growth investors. This one's called the Vanguard Dividend Appreciation ETF. Ticker symbol is VIG. And this consists of companies that, guess what? They raise the dividend every year, or at least most of them raise the dividend every year. It's got a very low expense ratio, like I said earlier, okay, 0.06%. That is very low by all accounts. Now, this ETF does have a lower dividend yield. At the moment, it's only 1.98%, which is not great, okay, I'll be honest. However, the idea with a dividend growth ETF is that the dividend is not going to be very high now, and at least that's the current dividend yield. But in theory, by the time you actually need to live off those dividends, maybe in 20, 30, 40 years, because of that dividend growth, the dividend yield will be much higher, okay? That is the idea with this kind of ETF. And this is what is inside that ETF. There is a lot of overlap, as you'll be able to tell from VYM, okay, the high dividend yield dividend ETF. However, they also have companies that don't have a high dividend yield, such as Microsoft or Visa, and even Comcast, but they do increase that dividend quite aggressively, okay? Every year they increase that dividend. Okay guys, that is the end of the video. Thank you so much for watching till the very end. You are a legend. Please subscribe to my channel because I release these videos every week. So if you want to support the work that I put into this channel and you want me to keep making videos, then do a few things, right? Click this video, give it a like, okay, if you've enjoyed it, subscribe to my channel, share this video, and also in the comments below, let me know, have you enjoyed this video? Have you got any ideas for future videos? Do you prefer dividend ETFs or dividend growth stocks? Let me know in the comments and I will see you in the next video. Thank you for watching. Take it easy.